Paper trade update. Saturday, January 7th, 2023. No futures contracts open. Got option trades. This one and this one are a little more recent, but this and all these were set up around November 23rd. I set those up testing out selling options with the VIX. And at the 1 minute mark, just coming up about 10 seconds, there's going to be a link popping up right here to selling options with the VIX part 2 video. Ready for that link? Boom, there it is. And then it's to part 2 because in part 1, in part 2, it links to part 1 in this place right here. So you can watch video number 2 and then watch video number 1. I apologize that it's out of order, but you know what? You get what you pay for, right? So you can check those out. And one thing that I've learned since then is when I first put that on, I let a lot of these just ride out to see what was going to happen. And one thing that I've learned since then is if I were to go back in time or going forward, doing it again, doing it with real money, I'm going to close them out faster. For example, there was a time where this SPX, I could close this out for about, I remember seeing it at 2,600. Okay, that would have been a time to close it out. Even though I have the potential to make more money, like, why? If I keep it open, I got the potential to lose more money, and the whole time it's tying up $20,000 of buying power. Same thing with almost all of them. Almost all of them have had an opportunity to close at a higher price point. And then I'm looking at this trade a little more of like less about getting half premium or something and just about a little faster. So now in my real trading account, I do have a position like this open that I basically set up specifically with selling options with the VIX. And that one I brought in about $1,100 of premium, but I might close it out and take a $50 to $100 profit, and then put the trade on again, and then do it again, and then do it again. I'm considering doing it in a faster time frame in the beginning, just to free up that buying power, lock in some profits, sell it again if I choose to. And then it just gives me a little more flexibility to do other things. Maybe I want to do something else with that money. Maybe there's a better trade to do. But so feel free to watch that video. I think it was at the 1 minute mark. Now here is a little bit differently. This one is it is not really selling options with the VIX. It's selling shorter term. You see 26 days to expiration. I don't really taking that much money, $35 a credit. And I'm just thinking in 30 days or less. I know it's at 26 right now, but I think it's been open for a couple days. I forgot. How can I figure out when I opened it? Opened this up 2 days ago. So a couple days. All right, so I don't know how many days it was. 26, about 28 days when I first opened it. Anyways, I think this is accurate, that the probability of it expiring in the money is extremely low. So I'm just gonna let this ride for a second and see I'll just kind of see what happens. It's a little too close to the money for an Apple is pretty volatile. So I would rather practice a little closer to the money here and then do it in a real account. So that's what's going on with that. And what I'll do, just to broaden 35, I'll set up a closing order Good till cancel. How about, let's put it at 10 for now. Now, sometimes what I'll do is, let's say I sold it for 35, maybe I put it at 25. And then I put it for good till cancel. Obviously, it's Saturday right now, but let's say it was Tuesday. I put good till cancel, and then the next day, like because I live Hawaiian Standard Time, the stock market normally opens, depending on daylight savings time, 3:30 or 4:30 a.m. in the morning. So by the time I wake up, which is around 6, maybe 6:30, then the market's already been open for about 3 or 4 hours. So sometimes I get filled, sometimes I don't, and then I adjust it. And then maybe I'm just trying to see if I can do it for a day. Maybe I'm like, okay, if I can close a position and make a quick whatever, you know, $10, which I know is not anything necessarily to be super excited about, but I'm the type of person that I don't feel like I have so much money that I can pass over pennies. If I see a penny on the ground, I pick it up. I hope you don't, because that leaves more pennies for me. And so learning how Apple trades, I've done a paper trade on it with a really far away, with a strike being 180. I closed that one out for like, I forgot what the profit was on it. It was a pretty good chunk of change though, maybe like $600 to $800. So for this, it's less time, so I brought in less premium. It's closer to the money. It's at 150, but it's still actually pretty far away from where Apple's, I think, currently trading. Yeah, about 130. It's rising up a bit, so we'll see what happens. Even if I, even if I end up losing money, then I find out that okay, in X amount of time frame, Apple can go from, I think this is this 1 month. So here's 150. You know, it really needs, it's getting closer to this, right? Here's around this 130. It's right under that green thing. There's this like line right here. It's some resistance. So if next week, if it starts running up next week and I see it starting to like test this 136, then I've got to watch it a little closer and I got to start figuring out what I want to do. And then if I see it starting to test this 142, if I see it starting to get over 140, 136, 137, and it keeps closing, if it just kind of does like this, like comes up and then comes back down, okay, right? It's not as worrisome. But if it's around like 135, 138, and it's sort of building a base that way, then there's two choices that quickly come to my mind. I guess the third one would be roll the position. But the first two that come to my mind is that right now I have a naked call here, right? Because you see quantity 0, sold 1. So I've committed, I've made the legal agreement that I'm willing to deliver 100 shares of Apple at $150 per strike. Now, if someone this Monday, if someone said, "Hey, Brent, I want my Apple," no problem. I would love that. I would love to go into the market and buy at, let's say, 130 and sell to this guy at 150. Right? Make $30 on 100 shares. Fantastic. But that's probably not going to happen. That's probably not going to happen because that guy or girl that's saying, "Hey, sell me those 100 shares at 150, could just buy them themselves at 130. So I don't really have to worry about that. But what if it starts running up? As I mentioned, it's getting around this 135, 160. One thing that I could do is before it gets to 140, or maybe by the time it gets to 140, I'm thinking I have to have a decision made. Is that decision going to be buy 100 shares to turn this naked call option into a covered call position? That's one thing I could do. The other thing I could do is I could turn it into a spread. So I could potentially go from I could potentially go from, what do we have here? Sell stock. I have no idea what what that is. We're going to sell stock. So right now we are, let's just get that out of here. I think we can do it like this. All right, short, here we are. That just exactly. We want to bring it out this way. So right now, we have all this risk, infinite amount of risk, basically. And our strike price, there we go. So we can put on add the simulated trade. So we could potentially, what do we have? The sold the 150. So one thing I could do, as I mentioned, buy the stock. Or what I could do is I sold the 150 right here, showing the position. I sold the 150 at 35. I could buy some protection. I could buy the 152.50, the 155, for example. Oops, I'll go with this. Buy that. And where is that? So that way, buying this option, I paused it because I had to quickly figure out why it was looking like that, and that I wasn't fast enough. That's why I had to pause it, and I realized it was because I'm selling another one, not buying. And the reason why I selected on selling is that I'm in the habit of selling options that I just click sell option. That's a great reason why you should do paper trades. It's so you can, don't make those little mistakes with your real money. So this would cut off our losses down here if we turn this into some sort of spread. Instead of having infinite loss, if we sold this or bought this, which one is this? The 155 for protection. It would bring our potential loss to max loss at 481. What if we wanted to do the, right? What's going to happen though, even though our potential loss is less, so is our gain. It's, what's the, I don't know what the market price is. 16 was, yeah, starts moving that around. And as I mentioned, we could potentially just buy 100 shares of that. Whoopsie. And I'm not seeing what I want to see. That button right there. Boom. There it goes. So this shows the risk graph of buying 100 shares. Right? Unlimited risk to the downside. We saw selling or buying protection via another call. Limited our loss there. This one changes it where we've got this to the upside. Now, personally, I'm not the greatest at using these risk graphs. Maybe you figured that out already. That's one reason why I'm doing this. And that is why you should be paper trading too, because paper trading is not about highlighting what you're great at. It's figuring out what you're not great at. Getting some, some practice on stuff. And so we have, okay, so that's that trade. We got the Apple, delete that out of there. And yeah, so we got that one going on. So naked call up there. We'll see how it goes. We got the we set a, we didn't do that. Create closing order. Let's put back for, let's put at 10 cents. I would rather have it expire, or I'd rather close it out at less than 10 cents. But you know, next week if I can quickly pick up whatever, about 20 bucks, okay. I'm okay with that. In here, right? It's still under options trades, so it'll be correlated with all right, we sent that in there. And okay, this one is in the option, in the playlist for paper trades. If you're not familiar with that playlist, I'll link to it right here at 16 minutes and 30 seconds. So that should be easy for you to remember. It's getting ready to pop up. Boom, there it is, 16 minutes and 30 seconds. If you want to come back later, you can have access to all those. A link to that playlist that has all these different paper trade stuff in it. You can learn a little more about that. But I've got this set up to automatically close also, and so far it seems to be going. Well, what is going on with it? Okay, the price is at 173, and basically as long as it stays above 135 and below 33, we should be good. We got lots of days till expiration, and I think I set this up just to close it out at, yeah, half. Right here you can see the trade price, right? Half. Just got those set up like that. So we'll leave those. And what's another new one? Short stock. This one is still just open pending, waiting to go down about 8 more bucks. I think I got that set to close at 360. So maybe it's going to be a minute, maybe not. I really don't care. Here's another new one. We got 3 different contracts, cash secured put options sold on Calm. Quantity 1, 12 days to expiration, brought in 30 bucks. Right now it's at 27.50, about a little bit less than 14% chance of getting assigned. And I'm just gonna kind of let that run out. I'm not gonna put a, like here, you know how I have these closing orders? I'm not gonna do that. The way I sell cash secured put options is I have the cash to secure the position. I'm okay with buying the stock. Hey, if it expires worthless, I'll probably sell the option on it again, or a different stock that I'm okay with buying. If I get assigned, I'll sell a covered call option against it. But I'm probably not going to close it out early. I'm not saying I won't. I said I'm probably not, right? H&R Block. This one has been on there for a while. There's only 12 days left. We brought in 40 bucks, and what's our strike price? 37. H&R Block is currently a little bit under 37. I think it got all the way down to like 35. Was it 34? But obviously it's rallied up a little bit. And to close this out, I'd have to pay money, right? It says in parentheses 50 bucks. That means that there's a difference of $40 and $90. I know that says 40 cents, 90 cents, but it's times 100, so $40. How about this? $90 minus $40 is what? It's 50 bucks. That's the difference. It's in the negative right now. And that's okay. If it was in a positive, maybe I'll close it out. Maybe I wouldn't, but why? Why close it out? I'm okay with buying H&R Block at 37 bucks. If I don't really want to hold on to it for a long time, then what I could potentially do is sell a put option, or excuse me, sell a covered call option at like 38 or 39. You know, will I make a bunch of money? No, but it just rotates. I didn't make a bunch of money and bringing it in. But what if I did this? What if I got $40 to sell the option? I didn't really want to own the stock. I got assigned, and then I sold a call option at 37. It's probably in the money. Let's take a look at that. HRB. What's HRB at $37 right now? Look at that. Probably get 65 bucks for it. The highest it traded was 68 the last time. It's got some contract interest there, so it's possibly maybe would get filled for 37, right? And that's 12 days. That's still the same contract we have. What if we did it like this? 37. Boom, look at that. Longer time frame. We know we'd have a greater probability of getting out. Doing the quick and dirty delta probability. There's about there's a 49% chance that we would, at the end of contract expiration, that this stock is going to be over 37 bucks. It could be at 37.20. And we would have that stock called away from us. We would not make any money on capital gains on the stock, but we would have made 40 bucks on the first option premium right here, and then this one maybe about maybe 170, 175, 175 bucks, maybe 170. What's 170 plus 40? Right, that's how much we would get from buying and selling a stock at the very exact same price. Right, so it's pretty cool. Or we could go at 38. All right, 38. You could still get a good amount of money, and you'd make 100 bucks if it went up to 38. And H&R Block, it pays a dividend. So even if it stays down around, even if it was at like 65, or excuse me, 36 or 35, we're still could be selling at 37, 38, and bringing in like $100 for a little bit over a month. And if your account's big enough and it makes sense to do this on, let's say, to have 5,000 like 500 shares of H&R Block or 1,000 shares of H&R Block, and to be doing that, that's ends up being a decent amount of money. Now, is that suitable for everybody? No, it really depends on your account size. But let's say you have an account size that is suitable to have, let's say, 1,000 shares of H&R Block. 1,000 shares, you know what this math is, divided by 100, that means 10 contracts, right? So what would happen here, at first, it was $40, right? So if we sold 10 contracts to buy H&R Block at whatever, 37, $40 per contract, we would have taken 400 bucks. Keep that in mind. And then let's say we sold this we got assigned, we sold this at $38 strike, and we got, let's just go with the low end, $120 times 10 contracts, plus that 400. So just on option premium alone, in about an 80-day time period, potentially bringing in about $1,600. So sometimes when you see like $40, you're like, oh, I'm only going to get paid 40 bucks for this. Put it in context of how can you scale it up, right? Because that's for one contract. How many contracts do you need to do in order to get the amount of money you want? How much money do you need in your account in order to be able to do, those things? So that's why another reason why the stock market is awesome, because at least as far as options goes, because it's fairly predictable and it is super scalable. So that's H&R Block. Looks like we're probably going to get assigned. It's got about a little less than 59% chance of getting assigned at the moment. Walgreens sold a cash secured put option on Walgreens. Only 5 days left. There's a little less than 14% chance that it's going to get assigned. Right now, it is highly profitable, and we sold it for whatever, 42 bucks. Right now, it could be closed out for about $9, $10. I'm just going to let it ride out. Where our strike price is 35, over here at 36. Charts. That's what chart I want. Come on. Juzo Pete's. Oh. What the heck was that ticker symbol? Oh boy. WBA. My apologies. WBA. So what's our strike price at? 35. Yep, 35. We see drop down here. Right? It potentially we're gonna get filled. Boom, went back up. Look at this though. I see that right there. And gap down right at this point. It's a pretty big gap. So looking to the left, I see it happen here before, right? For some reason, look at it, gapped up here before. Even though it came down here and touched this, it came down right to this. Boom, gapped up here. Keep looking to the left. Yeah, look at that. We see it touch that before. Up here. Yeah, see prices stopped here. Kind of sort of stopped and started there. Drop down here. Keep looking to the left. Yep. Doesn't surprise me. Something about that. Drop down. So the point is, this is over the last 5 days, 1 hour. So that weekly. Here's one of the reasons why I decided to sell the 35 is just to kind of see what would happen. I did this actually with a buddy of mine. We see 35 looking across on that weekly chart. See it obviously it comes below the 35, so maybe the resistance is really like whatever, I don't know, 34, whatever that is, but it's in that area. Right here, it's in the area 35. Right there, it's in the area 35. But it's below it. You know, whatever. If we get assigned at 35, no problem. I think Walgreens is an okay company to have at 35 if I want to do a long-term investment. Look at that volume, just like spiked up. Average volume line right there. Set up at what? 50. It's like a 50-day moving average for the volume. Look at all this low volume down here and a big spike up. Look at all this red volume. Red volume. Only one green candle out of there. Look at all this green candles. This is going back to, what, October. Overall, like going back to July, I think they're just more red. But when the green came in, boom, it came in big. Look at that. When it came in, though, look at here. Comes down here, pivots right here, comes up to here, $40, about that $40. Can't do it. Cannot do it. Boom, comes down, pivots here, comes back up to that 40, comes over a little bit, can't do it. Boom. So yeah, maybe we'll end up buying Walgreens. Let's take a look at this real quick. $35. So you're gonna look in two places, over here for price and over here for date. Let me change this real quick. Yes, just so you know, you want to make your candles full or empty, go to that little icon, do appearance, click whatever you want. I like having them full. So where's the $35? Where is it at? Okay, $35 right there. Right? Get as close to it as possible. Can I go up 1 penny? Ah, man. Okay, close enough. And so the 12th, look down at the bottom. You see 1/12. When does this contract expire? Look at that. That's right, the 13th. So yeah, there's a chance, right? There's definitely a chance because it expires on the 13th, and based on this cone of probability, might be getting assigned. Go up to that. Where's it? Oh, come on 13th. Just barely outside of that cone of probability. Oh, it's the 12th. 13th. Just in there. So it's okay. If we end up buying Walgreens, same thing. Sell call option against it. Statistically, there's less than 14% chance of getting it. Oh man, I am sleepy. So that's the update with the paper trading account. Paper trade. You don't have to do it, but if you do it, it's going to help your life. Can't believe I just said if you do it. You guys have a fantastic day. Bye bye.